Welcome to the Veronica Edwards Show, where we have fun financial conversations that everyone listening can apply to their personal and professional life. I'm your host, Veronica Edwards, CPA, and again, we are back 2026, Season 6, tax season, completely independent and sponsored by Balance Virtually LLC, which is my accounting and consulting business. So again, we always start at the top of the show, shouting out the V team. And if you listen to the prior show, that's not just Aaron and Jylen. That is everybody that supports the team. And we are over 120 YouTube subscribers. It seemed like it took a while for us to get over the 100 hump. And now we are really growing. We're gaining subscribers every day. We definitely want to hit 250 subscribers before the end of this season, which ends in the summertime. And one of our most popular shows we are having today. So thank you guys so much for supporting. If you want to be a sponsor or guest or just continue to be a loyal listener, please like and subscribe. So without further ado, let's just jump right in. Today is a CPA chat. We have good friend of mine, fellow CPA, Alanna Anthony, owner of Amplify Accounting and Consulting. Alanna and I have been chatting nonstop for the last few weeks because it's tax season. How are you, Alanna?
I'm making it.
I said, Alanna, we in there. I mean, we're recording. It is March 10th. So we have our first big tax deadline coming up in less than a week.
Yes.
I went to bed 2:30 last night, and I haven't even started anybody else's tax returns, but I'm working on everybody else's, like their financials and all the things. So tell me, how has life been since we last did our first live back in January, and we were just talking about best tax practices? What's been going on?
Well, Veronica knows, but of course it's tax season. We tried out a new tax software this year. I hate it.
It will remain unnamed, but we're not loving
it will remain
the
unnamed,
software.
but I will be switching. It's been pretty busy. Lots of client questions this year, especially with the changes with the One Beautiful Bill, or One Big Beautiful, whatever he named it, HR1.
Right, BBO.
Lots of changes with that. And then just, going through the renovation, we have walls, y'all. We have walls.
Yes, because back in January, I don't think you had walls and you weren't using your kitchen yet.
Right. Weren't using the kitchen. We're using the kitchen. We have walls. They're not painted. We finally bought paint. Well, we had to decide on paint. We had to get to a consensus. When you're doing something with a partner, you got to get to a consensus.
Yes.
I know some men let their wives do everything. Not mine.
Ours.
He has opinions. Yeah.
Yes. When I married Carlos, I was like, why you got all these opinions? But he was, Carlos's family. He's got 3 sisters.
Yeah.
Yes, and very strong-willed sisters and mother. So we're just doing little baby renovations. Like we're doing paint. Shout out to Brush and Level, Aaron. He's going to be on the show. We have another Aaron. And just 3 days in the house, I was like, Alanna, how you doing this? Like they were just in the common areas and in one bedroom. And I was like, this is a lot.
It's a lot of anxiety. I will say I am a germaphobe. So, for me, it's a lot of struggle because there's a lot of dust. You will not catch me. Like I look nice for the show and I'll look nice for a client meeting. But after that meeting's over, I am back in like sweats because wear my good clothes in this dusty place, not happening.
So what is the estimated time you think you'll be done now?
Hopefully this is just phase 1. So hopefully by the end of the month. It's just small stuff now. We're into like the little details. So the pantry was built out last week.
Nice.
We need doors for the pantry. There's a door in my office. I have 2 closets. So one of the closets does not have a door yet. And that's just me. So I need to get that door.
Yes.
And then like trim and, paint and light switch covers and outlet
I like that you're like, we're almost to the end and you have like a list of 30 things.
Yeah,
but I feel you. It's little.
Yeah, it's just the details. It's really just the details. And that's where I knew this is where we would get hung up because I'm very particular about stuff. And then, my husband has his thoughts. So,
Shout out
so
to
just the
Ryan. Shout
details.
out to
Yeah.
Ryan. Yes. Well, today, because we are about, 5 days out
Yeah.
until the deadline, if you're a partnership or you're an S-Corp, I told Elena, like, what should we talk about? And it's really fitting this time of the year. People are always asking, should I be a single member LLC? Should I be an LLC taxed as an S corp? Should I be a partnership taxed as an S corp, or should I just be a corporation as an S corp? All of those things. So today is all things S corp tax designation. So Elena, I'm going to hand the reins to you, and we're going to definitely talk about, what is a single member LLC. I have some notes here. What's an S corporation? The similarities? What's the major tax differences? When does it make sense to switch? That's always the question I have. What is the break even point? When does it make sense to be an S corporation? So, Elena, can you just start us off with, what is a single member LLC?
Okay. And I have notes too. So if you see me looking to the side, I'm looking at my notes because if you
Yes.
think I'm going to remember everything in the midst of tax season,
I can't even remember what I did yesterday.
okay, I do not remember. Okay, so basically, a single member LLC is just really a business structure. So, truthfully, you are like a sole proprietorship, but then you have that legal piece that protects you if anything were to happen in your business and someone was to sue you, or if you just made any type of mistake. It's just a liability protection that protects your personal assets from your business assets. And that's what you want. Just because a lot of people don't think about it, but their personal assets, like you want to try to protect that as much as possible because,
Yes.
that's when someone can, if you own a home, they can go after your house. If you have some assets that you want to protect, they can go after those too if you don't have that limited liability. And that's basically what
Gotcha.
LLC stands for, limited liability company.
So,
Now,
Elaine, real
oh, go
quick,
ahead.
when you mentioned business structures, I just want people to think about when you have a W-9 form, you can
Hmm.
see that there's sole proprietor, there's partnership. That's what we're
Hmm.
talking about business structure. But then we're also going to be talking about tax designation. And I think that's where
Right.
people, business structure, LLC, got it.
Right. Now, that's exactly where I was going to. So that was a great point. So, from the tax perspective, the IRS really looks at a LLC as just a disregarded entity. They look at you as a sole proprietorship. So, it's just typically you as the owner, and they are going to tax you based off of that. Remember, the LLC piece is just really just protection, if you
Hmm.
really think about it. I know some people feel like if I have a LLC, I'm more official. And unfortunately, that's the thought process. But truthfully, it's just protection, which I'm not saying you shouldn't do it because
Right.
you never know.
And however, but you could be a sole proprietor and get business insurance or get
Yes.
liability insurance.
Yes.
And you can also have an LLC and pierce the corporate veil, as we talked about on our live back in January. If you're
Hmm.
commingling, doesn't matter, what business, structure you decide on, you can be, the IRS can come after you or the state for you personally.
Exactly. They definitely can come after us. So please don't commingle, as we say every time we meet.
Please do not commingle. Yes.
So, from a tax perspective, with an LLC, you will have a Schedule C, which is a form that is added to your personal tax return. A lot of people don't realize that as a sole proprietor, as an LLC, that when you file your taxes, there's an actual form that is added to your personal taxes. It's not a separate tax return. And that Schedule C is going to show like your revenues, your expenses, and that's basically going to give your net profit, which is basically, if you think about it, it's like your profit and loss statement that you should have anyway in your business. Um,
Exactly.
but the thing about being a sole proprietorship or an LLC, you're going to be taxed on your net profit. And you're also going to be subject to self employment tax.
Uh-huh.
Now, I'm gonna say this. Don't think that I'm for being completely taxed on self-employment tax, but I just want to make sure you understand self-employment tax is Social Security and Medicare. And so this is how you, as a self-employed individual, pays into Social Security so that when you do retire, you can get Social Security. Now, I'm
Okay,
not gonna talk
pause.
about.
Pause.
Okay,
Pause. Pause.
okay.
Pause. Because you got a lot of people, especially during COVID, feeling like, oh, I'm self-employed. I'm not going to be able to get unemployment. I've never paid into Social Security. You have. If you've
You
had
have
a
if you filed.
profit,
Yeah,
if
yes,
you
and if you filed
filed
and you had a
and you have,
profit.
so
Yeah,
that is a myth. So we're busting that myth that because you're a sole proprietor, you're not going to get Social Security when you reach that Social Security age. That is false.
right. And truthfully, Imma say this because, and this is a side note, this is not even it's a little off topic, but Imma make this comment.
Yes, we
If
love that.
you are self-employed and you are not, um, contributing to, like if you're not filing taxes, so you're not contributing into Social Security and you don't have a retirement plan, please create something because
Please.
unless you plan to work the rest of your life, which I hope not, because if you want to, yes. If you don't want to, you want choices, basically.
Right,
So
right.
just make sure that you come up with some type of plan because you don't want to be stuck in a position where you feel like you have to work. And the reality is something may happen and you might not be able to work the rest of your life. So,
Yes, yes. And Elaine and I are at that age where we have aging parents, and we
mhm,
see how great actually these Medicare benefits are. Don't sleep on Social Security and some of these benefits that can help you when you do age and you might have different ailments that come along or need additional assistance. So definitely invest in you, which is making sure that you pay your taxes.
exactly.
All right.
All right. So you want to talk about what's an S corp?
Let's talk about what's a S Corp. That's what we lead it up to. So we know LLC, which I will remember Schedule C. It's on your personal return. It's a schedule. It is not a tax form or a tax return, but S Corp. What is an S corporation?
Okay, so a lot of people are confused and they think a S corporation is a business entity, but it's not. It's really a tax designation. And I'm going to say S corp for short because it's just
Yep.
I'm not going to keep saying S
Right.
corporation, but so you can be an LLC tax as an S corp, but you can also be a corporation tax as an S corp.
Uh-huh.
Right? So I'm gonna start on the corp side, the corporation side, just because it is quick.
Uh-huh.
So the only thing I'm gonna tell you, because most small business owners are not corporations. Most small business owners should not be corporations, but that's a topic for another show.
Yes. Double
Um,
tax. Double tax. We'll talk about
right.
that.
It's double taxation. So that's why you shouldn't be a corporation, especially if you're a smaller business. It just depends. There's some people who should be. Everybody's situation
Uh-huh.
is not the same. So if you are a corporation, you're getting double tax. If you designate the S corp status, then you end up being in a situation where you will pay less taxes because you're not double taxed. But just know that an S corp is a pass through entity. So even though there is a separate tax return, it is going to produce a K1 and that K1 goes on your personal taxes. So you do have to do your S corp taxes first and then do your personal.
Yes.
Now, going into like an LLC tax as an S corp, a lot of times an LLC will decide to be taxed as an S corp to save money on taxes, because there is a savings there. I know it's hard for people to understand, but what happens is you save on your self-employment taxes, and we can get in more details
Oh, we
about
gonna
that
get into it.
in
We
a
gonna get
moment.
into it. Uh-huh.
But as an LLC, you can elect to be taxed as an S corp, and I want to mention as a partnership because we haven't mentioned it. You can also be elect. You can elect to be taxed as an S corp as a
Yep.
partnership.
Yep. But you cannot be a sole proprietor and elect to be an S-Corp. You have to be
Exactly.
an LLC, a partnership, or a corporation. So for myself, when I started Balance Virtually, I was a sole proprietor. So I was Veronica Edwards doing business as Balance Virtually. I went to the IRS website, got a tax ID because I was being cheap, Alanna. I didn't want to pay the 125 to North Carolina and the 200 every year. I didn't know what I was doing. I was like, oh, I can go to the register of deeds, 30 bucks. That's it. So then I decided, hey, I do want to become an S Corp. So I went the long way. So then I had to become an LLC. Then I had to do the election that you'll talk about, the Form 2553 with the IRS. And
Mm-hmm.
then 2 to 3 months after that. So I went the long route. So I'm with you, Alanna, where we recommend people to just become an LLC, if you don't mind, because you're usually going to grow into it if this is not just a little side business.
Right. And that's what I was going to mention. If it's something that you're just trying, then I wouldn't, as much as I'm like, protect yourself. If you're just like, let me see how this goes, right? I would say stay a sole proprietor for a little bit. And then just once you decide, like, yeah, I'm going to do this, then you can invest the money.
Hmm.
But I would still say consult with someone, consult with a CPA, consult with an attorney, because depending on what type of business you're trying, right? You don't want to be in a position where you are trying a business that is going to put your personal assets at risk. Some things you can do, like we said, a little side something. I'm trying to think of something, but shoot, what
Like
I'm
if
thinking
you're a
of my
service
CV.
provider, it's not a lot of liability. I usually tell people
Right,
if you're selling things that people are going to ingest,
right.
where you're walking, you're doing exercise, where there's liability, massaging, you're touching people, you need an
You
LLC.
need something. Yeah, because I was gonna say a baker, but then I was like, mm-mm.
Right. No, no, you need to
All
be
we
an
need is
LLC.
a product to go bad and somebody to get sick and, so
Yes.
you definitely need to be protected that way.
Absolutely, absolutely. So, Elena, I want to hop around because you mentioned, you know, the biggest difference is that 15.3%. When do
Mhm.
people know when to go to be an S Corp? Because that's the biggest question.
I
Everybody
know.
that's listening, because I want to make sure that we get to that. Is there a magic formula? Or people like, hey, Veronica, I had 100,000 in sales, I had 50,000 in expenses, I have a $50,000 profit. I don't wanna pay 15.3% taxes on this. Like, when is it the right time?
So this is the problem with escort status. Everybody has a different opinion. I truthfully think so in the beginning I used to be like, yeah, 50,000. And then the more and more I work with S Corps, I realize like it needs to be higher. And
What?
it does. It needs to be higher. I personally think it needs to be higher. And if something comes out, let me tell you why. There's so many administrative costs that go along with being an S Corp. So one thing that a lot of people do, they will become an S Corp and they don't have enough profit to even pay themselves. And S Corps are required to have payroll. Yes,
Yes.
I know we hear about there's leeway, and I can admit I have seen the leeway personally, right? Not
Yes.
on my own because I don't have an S Corp. Oh, I would say, and I'm gonna just go ahead and throw this out here. If you're in New York, because of the taxes and stuff that the fees, Imma say like 300,000 minimum. It's not the same. It's not the same. So this is
What?
the
Yeah.
first state thing. Yeah, they treat you like a court, so it doesn't make sense, the level of the fees and stuff like that. But any other state, first of all, you should consider what state you're in, but then also, um, you have to pay payroll. There's expenses that go along with payroll, so you have to pay yourself a reasonable salary, right?
Reasonable. I'm glad that you said that.
Yes,
Reasonable.
reasonable as in what would someone in your same position doing your job get paid in your area? It has to be in that range. So you can't be an S Corp out here making like $500,000 a year and then taking a $20,000 reasonable salary. It's not gonna look good.
Right.
The IRS is gonna start looking at you funny. And I will say that yes, S corps tend to have a lower audit percentage, but we have heard, especially after like the pandemic and everything, that they were gonna look more into S corps. I don't know if that's still the case because there's a lot of things going on with the
Right.
IRS,
Right.
but
Right.
we've heard that. So in me trying to protect my clients, I would say, like, make sure you have your payroll. So your payroll costs, you got to pay yourself. You have payroll costs,
Yep.
right? You also have administrative costs because we even talked about it. You talked about it with the LLC. For some states, an S-Corp costs more and you have to pay a fee every year. And some states have like a
Yes.
minimum charge. Like, and I'm gonna say Veronica said we're recording this March 10th. So hopefully this is the same. But I know even just for California, if you have a LLC, it's like $800 a year, right?
Wow.
So exactly. So you gotta think about those costs that go along with it. And
Uh-huh.
what I don't like is I don't like to see, and this is what I've seen, so that's just why I'm speaking to it.
Sure.
Like you have a business. And a lot of times as a small business owner, especially if it's just you, you're like, oh, we're all one. You're not. And I know you have other goals besides just having a business, or I hope you do.
Right.
And so you may need to prove income. And yes, with an S corp, you can prove income from your W-2s. But if you need more income to support, you need a profitable business.
Yes.
And I have seen cases with my own clients where like they're trying to get a home loan or something like that, and they're trying to show that they have income coming through their business. If you have so many expenses, including like payroll and everything, and it's taking you into the negative because now you're S corp, it just
Yeah.
doesn't make sense to me. So, because it's
Mm.
not going to be looked at as a good thing. I've literally I had a client, they were S corp before they came to me. I was like, "Ooh, I don't know if you should be an S-Corp." Um, and we had a discussion, I'm very clear, like, "I don't know if you should be an S-Corp, but let's see how your business does, like, what are you expecting your growth?" And they were trying to buy a property, and the underwriter was definitely questioning, they're like, you have a net loss," like,
Mm.
and it was due to
Wow.
payroll. I mean, they had other expenses, but those extra expenses, those are the reasons why I felt like they weren't bringing in enough to be an escort. So for
Right.
me, I say maybe 80, maybe 100,000, but I do think it depends on your industry. Like,
It does.
cause
It
some of
it
my construction clients, as much as I be
right.
like, cause I see their revenue, I'm like, ooh, you should be an escort, right? And
When you see that
naturally you'll
bottom
think that.
line.
But then when you see the bottom line, you're like, yeah, no,
Yeah. Yeah.
not
Oh,
at
I'm
all.
so glad that you said that, Elena, because in the beginning stages, a lot of the small business owners I'm working with, their revenue is between 150 to a million or two, and their
Mhm,
profit is usually 200,000 or less. But most of my people might have a $50,000 profit. Well, a
mhm.
$50,000 profit might be an $8 or $10,000 tax. So for them, they're like, "Ooh, this is a time that I might want to switch." But then also, mainly, I know for me, it was I want to have a W 2 that I can show my salary for funding purposes. If I want to get a house, anytime you get a house, you need to have 2 years of W 2s. And so I wanted to make sure. But to Elena's point, I was also, I had a loss. I'm just going to leave it at that for my business. So I was escort, but I had a loss and it looked ugly. Like my equity looked crazy. And so now I'm building up out of that hole. But you're right, it depends. And every state is different on those state fees for corporations. So I'm glad that you said that. Well, that is very interesting. So for in your mind, it depends, but really more so over that 50,000 net profit.
Yeah, you wanna cover your administrative costs, and when you think
True.
about that, include paying yourself payroll and the cost to run payroll, because a lot of people don't consider the cost to run payroll, because running payroll
Yes.
is not necessarily cheap, and when you think about running payroll, they don't think about the payroll taxes, which is part of the whole benefits of
Yes.
going into
Yes.
a S corp.
Because we talked about the full self-employment tax is 15.3%, but when you become
Mhm.
an S corp, you split it. As an
Yeah.
employee, it's 7.65. As you as the employer, it's 7.65. So that's why I
Mhm.
was telling Elaine, I'm like, well, we still paying it. It's all rolling to me. where's the savings if it's split in half? Like, what would you say to that if someone's like, I'm just slicing and dicing this 15.3%, but it's still all rolling to me since I'm a disregarded entity?
Right. So I would say it's two things. First of all, it's mindset, right? I want you to think of your business. A lot of times we think of our business as our babies. I do it too. I have to check myself. We have to have a CEO and employee conversation sometimes, right? So you have
Yes.
to think of your business as separate from you. And even though you may not ever plan on selling your business, you should think of it as separate. It is it's separate on its own. And the reason why I try to do that is because you make better decisions that way, first of all. Second of all, from the tax perspective, it is separate. But here is the thing. When you're in an LLC and you're paying those self-employment taxes, you are paying it on your full net profit. So full net profit. On an S-Corp side, you're only paying it on the W-2 income.
Right.
So, for example, I'm just gonna throw random numbers. Let's say you make
Please, you know I love
200.
some numbers.
Yeah, let's say you make 200,000 net profit in your business, and I'm just trying to keep it low because I don't want anyone to feel like, oh, this doesn't apply to me because I'm
Oh,
not bringing in.
200,000 is kind of high for us down here, but
Okay,
okay.
let's bring it back down then. I'm gonna say 100,000. I'm just trying to use round
Thank you.
numbers, really.
100 is great.
$100,000, right? If you are an LLC and your expenses are 50,000, and back to what you said, and a $50,000 profit, you're going to pay self-employment taxes on the 50,000. And as an LLC, it doesn't matter if you pay yourself. I just want to let you know,
Right.
because it's just distributions. That's how it looks. So you're
Mhm.
not even, just a side
I'm doing
note,
the math
you're
over
not
here.
even
Okay.
writing off. You can't write off what you pay yourself in an LLC. So
Right. That's just an owner's draw,
it's just
reducing
an
the
owner's
equity.
draw. So whatever the profit line is, which would be 50,000, that's what you're paying self-employment taxes on.
And when I did the math, that's $7,650.
Okay.
Okay.
So if you decide if as an S-Corp, you're going to pay yourself, let's think of, I don't know, I'm trying to think of a good salary. I've seen so much.
25,000.
Let's say 25,000. So you made 100,000 in your business revenue, top line.
Revenue.
Expenses, we'll say let me keep it simple. So, cause I don't want to scare out the people like, I'm not good at math. 50,000.
I'm doing it right here with you. Right.
Right.
50,000 regular expenses.
Right. But you paid yourself 25,000. You're going to pay
Okay.
the self-employment tax. Your company will pay the self-employment tax. Their half is on 25,000. Your half
Right.
is on 25,000, not 50. There's a difference in savings. So how much is that, Veronica?
Oh, now you told me I was looking around like, okay. So I think, let me see. Okay, so if I do 75,000 times 0.765, that's only like $2,000.
Right. And before it was 7, right? So now we have a $5,000 savings in the business.
Come on now.
So now we
Okay.
can use that money to go into, if you're trying to grow your business, if you're trying to
Yes.
have other goals, like, okay, I need to take some distributions and use them for
Yes.
other things. And another side note about distributions in the S-Corp, those come out tax-free when you have payroll.
Got you.
So that's kind of like the benefit. A lot of people don't think about that, but they don't realize like, oh, I'm not paying self-employment tax on my whole profit. I'm paying it only on what I paid.
That amount change, that base change. That's where I was just like, it's still the same money. We're just shuffling it. But it's like, no, that net profit got reduced because now that owner's draw is shifted as a salary. Come on now. So,
yes.
So that's where it makes sense. Got it.
Yeah. But this is also why I say I want you to have a little bit more in profit, because I want you to still have a profit in your business. Like, we're not in business to take losses. And the IRS, after a while, is going to look at you funny, right?
Yeah.
We're in business to make money. Most people build businesses because they want to create legacy. They want to bring in income. They have other goals. And typically in your business, there's no ceiling, right? You have the options and opportunity to make more money. So you want to make sure that you are making a profit. Like I try to tell people, I'm like, we don't want to be, you're like, oh, I take a loss and then reduce my taxes. Like, please don't worry about taxes. I'm not even trying to be funny. And I'm not saying this as a person with like amazing resources as in money,
No, because
right? I
Alanna
didn't
tells
grow
me
up with a silver
this.
spoon. Like, yes, because that's the difference in the mindset. And it's something that's why I say I have CEO conversations and W-2 conversations. Right?
You're right
Because with
about that.
myself, because the whole purpose of your business is to make a profit so that you can provide a better life. Like that's typically, yes, you have a goal, right? Or a will, like you thinking
Sure.
like, oh, I want to help people, I want to do this. But there's also that piece where you're looking to make money. We're not in business not to make money.
That part, that part. So we're to the end of the show, Alanna. I'm gonna do a couple of recaps. Let me know if I'm missing anything. We started off with single member LLC, simplest structure, same as a sole proprietor. We'll have a Schedule C, and just like you said, subject to that full 15.3% of self-employment tax on your profit. That does not include those owner distributions, owner draws. But you can then change that LLC to be taxed as an S-Corp, or the partnership could be taxed as an S-Corp. And we're not even going to mention just a corporation as an S-Corp. And
Mm-hmm.
so, again, you have to make sure that you run a payroll, that you have a reasonable salary. You can still take an owner's draw, but you can't draw out more than you made in the business. We'll talk about that on another show, that retained earnings. Is there anything else that you can think of, Alanna, that you want people to walk away with when this airs on March 19th about S-Corp?
With S-Corps, there is a form. So you kind of hit on it earlier, is the 2553. You can apply for an S-Corp during the year. Some people apply when they file their taxes. Typically, if you're trying to do that, you want to do it before the S-Corp deadline, which is not regular tax deadline. We've already mentioned it multiple times. It's typically March 15th. This year would be
Hmm.
March 16th because the 15th is a Sunday.
Hmm.
But there is a form that you have to fill out to do that, and you have to wait until you get your designation
Hmm.
before you can start basically operating as an S corp.
Right. So we definitely, Alanna, had some shared clients because Amplify Accounting and Consulting is partnering with Balance Virtually. We're doing some tax planning, some tax returns, and we had people that applied because it does take about 2-3 months. But then it was December and they were like, okay, let me go ahead and set up payroll. But you need to have that designation so then you can get the proper tax IDs for your state for state tax. If you have state tax, unemployment, so you can run payroll. Payroll is not just your federal tax ID. So
Mhm.
these are all the things that you need. I'm glad that you brought that up. There are a lot of great folks that will charge you good money to file that form. Reach out to me and Alanna. We can give you an example. You just fax it in, it'll be fine. So,
Right.
Alanna, thank you so much during tax season, the last 6 days before we have a partnership and S-Corp deadlines. And thank you for partnering with me because I'm learning a lot from Alanna, just from the show, but also being her apprentice this year, learning about business tax returns. So again, I just want to thank all the listeners for tuning into the Veronica Edwards Show. Don't forget to like and subscribe. We are also on Buzzsprout, which we've been getting a lot of people listening to the audio version of the show at veronicaedwards.buzzsprout.com. But until next time, stay balanced and financially savvy.